is open to press, but it's also being live streamed to the public on our social platforms and on our website. This morning, we will hear from our Executive Director, Dr. Fatih Birol, as well as from Laura Kotzi, who is the IEA's Chief Energy Modeler. We will have also time for a Q&A session after the presentation. Please note that following this webinar over the next days and weeks, there will be a series of public webinars for people to also be able to join the conversation around the plan that we're proposing. So without further ado, I will turn the floor right now to Dr. Birol to present this report. Thank you.
Thank you very much, Jet, and good morning and good afternoon, dear colleagues. Today, we are in front of you with our new report, World Energy Outlook, special report on sustainable recovery. I guess many of you have been following what the IEA is doing in the last few months, and I'm sure many of you would agree with me that we were doing a lot of things, but they are all in the following context. So 3 groups. First, what we have done, what we have designed is that what is the assessment of the damage assessment of the coronavirus on the energy sector. Oil, renewables, efficiency, impact on the CO2 emissions, the impact on the global energy investments. We assess the damage, the order of magnitude of the damage. This was the first one, and our numbers show that there is a huge impact on the energy sector, across the energy sector. Some part more, some part less, and a big decline in the carbon dioxide emissions. This is the first category of work we have been carrying out. Second of the 3, second is today's work, we are putting on the table a roadmap how to get out of this crisis in a better shape. In a better shape means with a much more modern, cleaner, and resilient energy system, but at the same time, while energy policies give a boost to economic growth and help to create new jobs. This is the roadmap, a sustainable recovery roadmap we are putting on the table. This is for the governments, for the world. We have received several calls from governments, emerging countries, advanced countries, and this is for the governments a roadmap, how to get out of the crisis in a better way. Third and the last part, at least for the time being, will be on 9th of July. There will be an IEA Clean Energy Transition Summit, where we have already more than 40 ministers confirmed around the world, governments, which make about 80% of the global energy use. And this report, the roadmap, what we are going to share with you, will be the main menu on the table for the ministers to discuss, to decide what next steps to take. So this is the IES plan after coronavirus, and I am thankful to my colleagues in the last 3.5 months working very hard on all these 3 issues. Now, why did we make a special report, the Sustainable Recovery Report? Because we have received several calls from governments, asking us what kind of role the energy sector can play. And we learn from the past. When we look at the 2008 financial crisis, we have seen that the global emissions at that time in 2009 declined, as a result of the global economy going down. But 2010, it increased much more than the decline in 2009. So in the 2010, with the rebound of the economy, recovery of the economy, global emissions increased by 1.7 gigaton, which was the highest in the history up to now. So what we wanted to do with this report to avoid that rebound and put the world in a sustainable energy track. But IEA doesn't live in a different planet. We know that the climate change for the IEA, for many people around the world, is a top priority. But we also know that the many governments, citizens of the different nations around the world, are worried about the economy, and many people are worried about the jobs as well. Unemployment is and will be a major problem. So therefore, our report addresses three topics simultaneously. How we can, with the right energy policies, A, boost economic growth, B, create jobs, and C, put the world in the right sustainable track. And the work that my colleague Laura Cosi and her colleagues put together gives me three very important findings. In terms of economy, we see that if the policies we propose are implemented, global economy on an annual basis get an additional boost of 1.1 percentage growth, 1.1 percentage growth from the economy. Very good news. Second, as I said, the employment is a major issue. And as we speak now, we see that 3 million people in the energy sector already lost their jobs, and another 3 million is at risk. And our policies, our roadmap, our plan, our recovery plan, sustainable recovery plan, saves and creates 9 million jobs on an annual basis. So this is the second one. Economic growth, 1.1 percentage point, and the 9 million new jobs. And I should tell you that I am thankful to International Monetary Fund working with us, IMF collaboration with us to help us our economic analysis. Third, and the last finding for me, very important, this plan puts the, first of all, avoids the rebound in the emissions and makes the 2019 as the definitive peak. This is very, very important. Very, very important. And it puts the global emissions on a structural decline, because we look at the next 3 years on a structural decline, and keeps open the possibility to net zero emissions in 2050. So these are the three important findings on economy, on jobs, and on the implications for the emissions and the energy sector. To finish, dear colleagues, we are very happy to have a lot of interest from the governments around the world. I would like to thank all of those governments encouraging us, working with us, and waiting to look at our results, discuss our results with us, from Americas to Africa, from Africa to Asia, Europe, and beyond that. And with this, I would like to leave the floor to my colleague, Mrs. Laura Cosi.
Thank you very much, Dr. Birol. I'm going to now give a bit more information about the finding of the report itself. Let me start where Dr. Birol described the very basis of this plan. Governments have clearly two priorities now. They have to drive our countries out of the largest economic depression we have seen since the 1930s. It's a big imperative. At the same time, as Dr. Birol mentioned, we are seeing a huge amount of unemployment around the world. Just in the second quarter of 2020, 300 million people went out of jobs. Some of those will be permanently lost. So there is an urgent need to create new jobs. And third, as Dr. Birol mentioned very clearly, the energy sector has a central role in two ways, ensuring that we put sustainability at the center, and at the same time that we provide and we continue to provide our citizens with reliable supplies, in particular electricity. So what we have done, we have analyzed in detail 30 policy measures, and they are very much grounded to the different country circumstances. We have analyzed those looking at the pipeline of projects, market circumstances, and different national priorities. What we found is the following. What would be needed to ensure that the three goals are met simultaneously, so boost the economy, create new jobs, and put the energy sector into a more resilient and sustainable future, we would need 1 trillion a year for the next 3 years. Where would this money be needed? Is three big areas. The first is the electricity sector. In new generation, for example, new solar parks, repowering windmills. In efficiency, for example, buildings efficiency, or industrial pumps. And finally, in other sectors that would, for example, be new emerging technologies such as hydrogen, CCUS, but also urban infrastructure. For example, EV recharging stations for transport.
Laura, please, can you just
Yes.
share your screen because we're not seeing all of your slides yet.
Oh, I'm sorry. I apologize. I thought it was visible. Can you see it now?
No.
Not yet.
Okay, maybe we can, if you have the idea.
No, we are not. We can.
We can go ahead. We'll try to put them separately. You can keep going. That's okay.
You can see now.
No.
Yeah, you can keep going. It's okay, Laura. We'll just put the slides in the. There you go. That worked.
So I really apologize with everyone. So we are basically saying 1 trillion a year, electricity, efficiency, and other sectors. So in the work that we have done with the International Monetary Fund, we have basically plugged this $1 trillion in their macro models to understand what would it mean for economic growth. And our findings is basically the following. As the executive director mentioned, this would mean an increase of over 1.1 additional percentage points every year in the global economy. This means that by 2023, our global economy would be 3.5% larger. What does it mean, 3.5% larger? You have to imagine is adding the equivalent of Japan to our global economy within the next 3 years, a very significant growth. If you look at different countries in the world, the emerging economy would see the most out of it is this new investment. And the reason is simple, the capital in these markets would have high productivity, imagine that we would be able to reach more people that currently live without access to electricity. We would boost productivity of agriculture and industries. At the same time, as Dr. Birol mentioned, we have done a new analysis on employment, looking in particular at the energy sector. Currently, we are expecting, because of the unprecedented slump in investment that we are expecting in 2020, we are expecting around 6 million jobs will be lost this year in the energy sector. They are at risk. However, if the plan is successfully mobilizing this $1 trillion each year for the next 3 years, we would be expecting to see very significant new jobs created every year, around 9 million every year. Where are those jobs created is mostly energy efficiency, the electricity sector, and others. In particular, we find that there are 2 areas where jobs will be boosted. Energy efficiency in buildings is a very, very high job multiplier. Solar and wind and grids also would see a significant pipelines of new jobs. This is overall very good news because there is an excellent match between the skills of the people that are currently losing their jobs and the skills of the job needed in construction and manufacturing that would be needed across the sector that I've just mentioned. Turning to another part of our pillars, which is really electricity resiliency, the very reason why we are able to do these video conferences together with of course, internet, is that our electricity supply is there and working. Clearly, the need for electricity to be there all the time is increasing and will be even more so in the next years to come. There is a worrying trend, however, that we've seen in the past several years, which is, as you can see here, investment in grids have been declining. So we put a lot of emphasis in our plan into increasing investment in grids to make sure that the grids are modernized, strengthened, and extended. This would ensure that the lifeblood of our economies, electricity, will continue to be there, accompanying transitions and the economy. Let me turn to the other key pillar, which is what would this plan do to energy-related emissions? Dr. Birol mentioned very clearly that in the previous global financial crisis that we had in 2008, emissions went down. Governments prepared stimulus around the world, and the result was that emissions rebounded very strongly, and we created a new amount of capital stock that continued to lead emissions up until 2018, and 2019 was a flat year. Now, 2020, we are expecting a huge decline, nothing to be happy about. This has come as huge costs, economic, social, and even human lives. So where do we go from here? There are basically 2 options. We go ahead with the financial stimulus plans that are not sustainable. And the result will be the following. Emissions would start rising again and probably go above the 2018-2019 peak just within the next 3 years. However, if the plan is materialized, our analysis shows that emission would not rebound above 2019 level. They would be put into a structural decline. There are 2 very strong findings here. We would cut, by the end of the plan, 4.5 gigatons of emissions. This is a huge amount, and emissions would not go higher than 2019. Of course, there are ranges here because there are uncertainties about what happens to energy markets, what happens to investment that are market-driven, and what happens to behavior. However, it's very clear that the lower end of this path may well lead us and put us in the good direction to reach even the most ambitious parts of the Paris Agreement. So just to some concluding remarks that summarize our findings before giving back the floor to Dr. Birol and Jad Mohammed. Currently, governments have already put forward stimulus plans for worth around $9 trillion. This is huge. More is expected to come, more is expected to focus on infrastructure, including energy. So there is really a once-in-a-lifetime opportunity to make this investment right. In the Sustainable Recovery Plan that we have put forward, built bottom-up and country-specific, the work that we have done in the International Monetary Fund shows clearly that we can meet 3 goals simultaneously. So we can boost economic growth through targeted energy sector investment, 1.1 percentage points additional every year for the next 3 years. We can create or save around 9 million jobs every year, so very significant job employment, and make 2019 the definite peak in global emissions, a big landmark in the fight against climate change. How much is the size of the money that we are expecting to flow into this recovery? Is it large? Is it not large? So during the global financial crisis, around 16% of the recovery at the time was directed to clean energy infrastructure, 16%. With this plan, we are expecting, if you just consider the amount of money that is being put forward today, this will be equivalent to less than 10%, the government requirement money. Of course, the role of the government is much beyond the direct investment. It's to put the right policy framework. I would conclude, just remind that the date of the Clean Energy Transition Summit that the Executive Director mentioned, 9th of July, and give back the floor to the Executive Director, Njad Muawad.
Thank you very much, Mrs. Kozi. Now, just before passing the floor to Jet, 2 points. One, the reason why we were so determined to finish this report in a timely manner in June is because we know that several governments around the world are putting their recovery packages together, economic recovery packages. And we wanted to show them that including right energy policies will help their economy address the employment issue and create a better energy system. The timing is therefore very important for us, because we know that the governments will make hugely consequential decisions in a short period of time for the future of our energy and climate future. The second thing I wanted to remind all of you, if I am not wrong, Jet, this report is freely available to anyone who is interested to download. And if you are genuinely interested to read it, you can also read it, but if you can really download it as well for those who are would like to take the debate forward. With this, I would like to turn to you, Jed.
Many thanks. We are now entering the Q&A session. Please, for the journalists and on the webinar, please use the Q&A function on your screen. We'll give you a couple of minutes to send us your questions. We will try to go through as many as possible this morning, but you can always obviously reach us at press@iea if we don't manage to get through to your questions this morning. And as Dr. Birol mentioned, the report is available for download. It is also entirely in a digital format on our website, so you can certainly visit at iea.org. So with that, we'll give you just a couple of minutes for questions to come in, and then we will go through them 3 at a time as per our practice. Thank you. Okay, thanks. So we're starting to see questions come in. Some of them are similar. I'm going to go through them and read them. Um, so the first one from Jeremy Cresswell from Press and Journal Energy Voice, pointing to the claim that the plan would make 2019 the peak in global emissions. The question goes on to ask that there has been some data release about emissions going up this year, suggesting that the claim about 2019 may be optimistic. Second question from Sam Meredith from CNBC, thank you, saying that a similar question, what makes you believe this time could be different? And then a question about nuclear investments from Louise Ested. What is the IEA's position towards new investment in nuclear? And then a question from Junior Isles from the Energy Industry Times. What has been the US and China's reaction to the recovery, this plan? And maybe I can throw one to Laura as well. While we're here, what role does the LNG sector play within this plan? Dr. Birol.
Perhaps I can start, and Laura can also come in. First of all, if you can go to the first question, the measurement in the observatory data vis-a-vis the emissions, annual emissions, as long as emissions are greater than zero, the concentration of the CO2 will continue to increase. But whether or not, as a colleague from the CNBC asked, we are optimistic, we don't know. But what we are saying that there is an opportunity. There is a once in a lifetime opportunity. And compared to the 2008, 2009, we have at least three major advantages, competitive advantages, why it may not rebound. Number one, the cost of clean energy technologies are much cheaper now compared to the financial crisis in the 2009. This is number one. Number two, the current decline of the emissions this year is very steep. And third, many governments around the world are taking the environmental climate challenges now much more seriously than it was 10 years ago. So therefore, this is the reason we are, I wouldn't say optimistic, but we are hopeful that the governments will this time pass the test. Now, the point on the United States and China, of course, first of all, I should mention for our 9th of July summit, I have invited both the US Secretary of Energy and Chinese Energy Minister. They both confirmed that they will be attending the 9th of July meeting, and we will be discussing with them. Of course, we don't know what kind of policies they will, in the coming rounds of stimulus packages, recovery packages they will include. But leaving these two countries aside, for any country in the world, A, B, or C, even a country takes the climate change as a top priority. If they want to make use of the energy sector in order to address the economic growth and create jobs, they still need to look at the many of the policies that Laura has just shared with you. Finally, on nuclear power, the three major policies that we are looking at now is the solar and other renewables, energy efficiency improvement, homes, manufacturing sector, and others, and third, building grids. But in addition to that, many governments, many countries have nuclear plants, and especially in the advanced economies, in my view, the extending the lifetime of existing nuclear can be a very important source of electricity generation, help us to bring the emissions down. So these are the three answers I wanted to give, but maybe Laura would like to add a few things on it as well. Judd.
Thank you, Dr. Birol. Maybe one additional point before coming to the LNG question on what is different this time. If we look just at the cost of solar, for example, we are now compared to 12 years ago, cost of solar is 1/5. And if we look solar compared to other generation technologies, they may be more polluting. Solar has now a productivity of this capital that is much larger, and the employment opportunity related to that are much larger. So we have now really clean energy technologies across the space, including in the electricity sector, that can provide more economic growth, affordable energy, and largest job employment than other technologies. So quite different situation than a few years ago, than 10, 15 years, than 12 years ago. The role of LNG, we have looked in detail and the role of natural gas among the measures that we have analyzed. LNG has been, together with natural gas, played an incredible role in 2019 in keeping the emission flat. It had a big role in that in previous years because it's displacing coal. The coal to gas switching potential is still quite large. And we estimate that with current prices, there will be another 300 million tons potential that could happen just economically by market conditions without needing government intervention. So we have analyzed within the report what is the potential for coal to gas, gas in particular, what is the job implications and everything. But with the current market conditions, we have just released our gas market report a week ago. We don't see necessarily currently a need for a dedicated government intervention within the next 3 years. However, we do expect gas to play a very important role within for keeping not only emissions down, but also maintaining energy supply security. Thank you.
Thank you very much, Laura. We're going to go through another set of 3 questions. The question from Ronan Kavanagh from Energy Intelligence: what would the policies you suggest imply for oil use and demand going forward? How can oil producing countries adapt? Question from Frank Watson: what are the main factors that might inhibit governments from following this recent advice? Probably those 2 for you, Fatih. And then one question likely for Laura from Tom Brown from ICIS News: if government spending is around 10% of the required amount, where do you see the rest of the investment coming from? How does the proposed EU Green Deal complement this plan? Thanks.
The oil industry will be surely affected from the clean energy transitions. No company will be unaffected by the clean energy transitions sooner or later. When it comes to the oil producing countries, as we have said repeatedly, it is the high time for diversification and not to link their economy only to oil price revenues. There are some countries who are going very difficult times, such as Iraq, for example, with whom we work very closely together, especially to design their electricity system. I just talked with the new prime minister. I told him that we are going to support Iraq to build a good electricity system for Iraq. But many people have said, including some CEOs of some major companies, with the lifestyle changes now through teleworking and others, we may well see oil demand has peaked and oil demand will go down. I don't agree with that. Teleconferencing alone will not help us to reach our energy and climate goals. They can make a small dent. Only right government policies can help us to reach our energy and climate goals. What kind of policies? For example, when we talk about oil demand, electric cars, which is one of the main emphasis of this report, the more efficient cars and others. So we will need oil this year, next year, the year after, but we should know that the demand increase of oil will slow down significantly in the next years to come. The other question we were asked was what is the, I cannot read that one, number 8. You asked me, but I cannot read. If you can go up. Okay, what factors might inhibit governments from following this advice from the IEA, from Frank Watson? So there may be many reasons, political reasons, financial reasons, but I can tell you the following. We give many advice to governments. It is not what they must do. It is what they can do. And none of the our suggestions have any barrier in terms of the availability of those technologies. They are all currently available technologies. There is no barrier there. This is number one. Number two, in terms of financing, some developing countries may have a financing challenge, and here we know that there are some private investors which can be mobilized, but we are also working with international financial institutions to be a part of the game, and this is one of the reasons why we have carried out this study with the IMF. So in our view, there is no political red line, as all of these policies are around the world already being implemented, but how they are implementing it, at which pace is put in this report for the governments and beyond.
Thank you. And Laura, please. So a question was, as a recap, if government spending is around 10% of the required amount, where do you see the rest of the investment coming from?
So first of all, the amount of money that we are expecting to come from government spending is around 30% of the overall 1 trillion, and it will depend, the amount of money, government money will depend on which country and region of the world you are in. In advanced economy, the amount of direct funding may be lower. You may need more government funding in emerging economies. Very clearly, there is an important role of governments to attract private capital, and the ways to do that are multiple, depending on the specific sector where we want to mobilize the investment. It could be just simply ease regulatory approvals or permitting, going to co-funding through grants, concessional loans, long-term contracts. So there is a combination of policies that the governments will need to put in place, working very closely, as the executive director mentioned, with central banks, international financial institutions, to make sure that private capital comes into those projects that, in most cases, are actually saving money within the period of the plan. 30% of the projects that we are evaluating are actually money savers.
Thank you, Laura. Also, maybe there's a follow-up to that question, Fatih, is how does the proposed EU Green Deal complement this plan?
The big chunk of the EU Green Deal plan and our recovery plan are parallel to each other. And it is the reason why we think the EU Green Deal, if implemented as it is now proposed in a just way, in a way that is implemented quickly, it can be definitely a good success story for EU. In fact, in a recent op-ed I wrote with Mr. Timmermans, we have outlined the cornerstones of the EU, possible EU Green Deal, as well as our recovery plan. Having said that, there is one thing important. The EU is, with this Green Deal, making a very important step in the right direction, being a role model for many countries around the world, but EU is today responsible for 8% of global emissions. 92% comes from the other countries around the world. And as we all know, 1 ton of CO2 going to atmosphere from Paris or from Brussels or from Munich has the same impact from Beijing or Jakarta or somewhere else. So therefore, it is the reason we have a global map for roadmap in this report.
Thank you very much. I think we still have 2 more questions, so if you want to take those. So one from Aurélie Barbeau from L'Usine Nouvelle. It's probably a follow-up to the same question. How could the share of this investment be shared between countries? Yeah, and then the question, this one I will probably direct to Laura from Nuran Erkul from Anadolu Agency. We've been talking about clean energy for a long time. Renewables is still, however, limited to transport, heating, and cooling. What needs to change to make this plan into a reality? A second question, the use of coal is on the rise, especially in Asia. What do you make of that? So, share of investment.
Which one is mine?
For, the share of investment.
Okay.
Yeah.
So the share of investment is about half of, more or less, but 45% in the advanced economies, the rest in the other countries around the world. And of course, both of them have difficulties, different type of challenges, but coming to looking at our numbers, looking at the past practices and the investment practices, the numbers we have are completely within the reach of the country's financial capabilities.
Okay, thank you, Laura.
So on the question about the speed of the transition, very clearly we are seeing, I would say, 2 speed of energy transition. And the electricity sector, which is going quite well, where we're seeing deployment of solar and wind and low carbon generation increasing very fast. We have just found that in 2019, for the first time ever, the low carbon generation surpassed coal globally. It's the first time that it happens ever. In 2020, we are expecting this gap to continue. And when we look at the pipeline of projects going forward, here there is an important pipeline. Here, what is important for government is reestablish supply chains and just speed up the permitting and continue with the good policy that was put in place. This is for the electricity sector, the main key points. Outside the electricity sector, especially building and transport and industry, as Dr. Birol said, we have put forward things that are within reach. It's clear that what has happened with energy efficiency over the past years is worrying, and we are totally aware of that. Dr. Birol has convened a global energy efficiency commission to discuss what can be done. So the Global Efficiency Commission, which brings together very key high-level people around the globe, has taken the finding of this report and will come out next week with very clear policy recommendations stemming from the report. But just to give an example, we could think of cash for clunkers that would help buy more efficient cars and going towards electric vehicles more and more. This is comprised in the plan. We could support building refurbishment towards more energy efficient buildings, starting with government buildings. So there are very clear actions that can be taken in a very short period of time to boost investments outside the power sector and kickstart the energy transition there too. Thank you, Jad.
Okay, thank you very much. We're not getting any more questions, so and it's about 10:50, so it's a good time to wrap this up. So, Dr. Birol, if you have a few concluding remarks.
Just to say that we are very happy with the, first of all, with the idea that opened the public. I understand from my colleagues that thousands of people are following this event, and I hope you find it useful. Again, it is you can go through our report. It is freely available. You can ask us questions, discuss with us. We are open and transparent manner, happy to discuss those and get your comments to make our work even better. But one thing is clear, IEA is going to lead the global clean energy transitions around the world. We are very determined, and we are very happy that we have many countries working with us to support the International Energy Agency and many international organizations. We are working together to reach that goal, namely to have a sustainable energy future. So I would like to thank my colleagues, Laura joining us from her home, but also I have Christoph McGlade here, and Dan Wetzel, a new colleague joining our team, and many others supporting us and work very hard to make this work for the International Energy Agency. But as of now, this report is not anymore the International Energy Agency, but this is a report of the world, and we are very happy to get all of your comments and suggestions to improve our work. Thank you very much to all of you, and many thanks for so many people joining us early in the morning. Thank you.
Thank you very much for joining us.